For Your Money is brought to you by NelsonCorp Wealth Management.
It's now time for Your Money. We're joined by David Nelson, CEO of NelsonCorp Wealth Management. Welcome back, David.
Thank you, Brandy.
So while we have seen a little more volatility in the stock market in recent weeks, prices still seem to be at elevated levels. Now, with people asking whether a rally can keep going, what is something maybe you look at for answers?
Well, I think the prudent question is built into the process that we talk about on a regular basis with our clients as well as on this program. And that's it's very important to assess risks. And so if we had to hone in on one item, it certainly would be the market itself. With all the discussion on inflation and the Federal Reserve and the supply chains, they're all important. But if you really focus on, and the chart that I brought along today is really going to hone in on exactly what I brought up earlier, and that is the market itself. It's called trend following. Now, it's not perfect, but what it does is it keeps you on the right side of the big moves. So what we have here is basically a chart illustrating, the blue line is illustrating the S&P 500. And again, a good proxy as far as for what the market is doing, etc. And in red, we have in there kind of boxed in. This is a simple recipe as far as to try to stay historically on the right side as far as of the market. Now, what it's illustrating here is quite interesting, and that is when the market goes up 8.4%, it triggers a buy signal. So that's the arrows that are pointing up. And then the inverse of that is obviously when things are looking like they're going to go down, it's a 7.2%, which is a sell. And what we're trying to illustrate here is that history says that if the market goes up today, historically tomorrow, the odds of it going up tomorrow are pretty good. Now, it doesn't happen every day, and that's why, again, we're talking about 8.4% on the buy and a 7.2% as far as on a sell are a good starting spot for individuals to have a disciplined approach to investing money.
All right, so why is such special consideration given to watching price trends compared to all of the other things that you keep an eye on?
Yeah, and the main reason for that is that interest rates, inflation, stock earnings, they certainly play a role as far as in trying to analyze as far as what tomorrow is going to bring. But it's always in a different environment. The environment that we're looking at today is different than it was a year ago versus 2 years ago versus 5 years ago. And so some of these variables can be distorted because of that. Example, this interest rates going up historically are really bad news as far as for stocks, but yet this last increase that we saw with interest rates going up, stocks rallied significantly. So again, following the trend is historically been a much more conservative type approach to investing.